Hello everyone, I am Pratap here. We are at part 2 of lesson 21. In this lesson, let us discuss about different categories of high liquidity zones and their priorities. And this lesson is having dependency on the earlier lessons. In case if you did not complete the earlier lessons, I request you visit our NeoStock YouTube channel. There I have provided all the training lessons in a playlist Supply Demand Zone Price Action course. Even I have provided the link to this playlist in this YouTube video description. If you click the link, you will get into this page. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training videos are available in an order. So please go through all these lessons one by one and strengthen our skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. So now let's get into the part 2 of lesson 21. HLQ zone. So HLQ zone is the short name for a high liquidity zone. It is also called as a high probability zone. That means the zones that are having more institutional pending orders. Such kind of zones, we are calling it as a high liquidity zones. So this zone might be having higher institutional pending orders. That means the liquidity is high. Many times these zones support multiple tests because the liquidity is high. That could be one reason. And there is a tendency. Institutions, they keep on adding new orders on the same zone again and again. That's why the same zone will be working again and again. That way it supports multiple tests. And these kind of zones we need to identify. And we have a challenge in finding such kind of zones. So NeoStock software identifies these high liquidity zones. And some of these zones work well even if the zone is against the trend. And some of these zones are having the ability to change the trend and also the price direction. That's why these zones plays a very important role. But how to understand these zones? How to find the zones? Many of the people are asked in the earlier discussions, how to find these zones manually? Is it possible? Yes, it is possible in some of the zones, but it is not possible, I can say almost impossible, almost, in some other type of the zones. So what kind of zones we can identify manually and what kind of zones we can identify only with the help of the software? That also we should understand. All these things I will explain now in this video. First, let us do the classification at high level. Classification of high liquidity zones. Mainly, I am classifying high liquidity zones into two categories. The first category is high priority, high liquidity zones. That means among the high liquidity zones, I am defining the priority. Defining the priority in terms of their success. It's not about their order flow. In terms of their success. Those zones having certain types might be having a higher success rate compared to the other type of the high liquidity zones. First of all, high liquidity zones are having higher success rate compared to the normal demand zone or supply zone. This is the point you have to accept. But within the high liquidity zones, some type of high liquidity zones are having even more success. And compared to them, Some other type of the high liquidity zones are having maybe a less success rate compared to the higher success rate zones. This is what you have to understand. But compared to the normal zones, whether high priority high liquidity zones or even low priority high liquidity zones, their performance is much better. There is no doubt in that. So that's why I am making very clear here. This comparison is among the high liquidity zones, not about the normal demand and supply zones. So we have a high priority high liquidity zones C_DZ and C_SZ. What is this C_DZ, C_SZ? We discuss in detail. Next one is S_DZ and R_SZ category. And the next one is TCP_DZ, TCP_SZ, another category. These category of the zones I am calling as high priority high liquidity zones. And we have low priority high liquidity zones. Maybe the word low priority may not be an appropriate word. The reason I have given, comparing with high priority, their priorities are a little lower. So by seeing the word low priority, don't assume they are not good zones. They are good zones. They are high liquidity zones. Compared to the normal zones, their performance is much better, no doubt in that. So the first category in low priority high liquidity zones is possible LT of TCP demand zone, possible LT of TCP supply zone. That is one category. And another one is a TCO demand zone and TCO supply zone. And third one is a TCZ demand zone and TCZ supply zone. First you need to remember these names. And what is the abbreviation of each of these, I will be explaining in this video. So far we haven't discussed about these abbreviations. So now let's start with one by one. The first one is C_DZ, C_SZ. These are the short names I have given. So what is that abbreviation? C_DZ is the short name for controlling demand zone. And C_SZ is the short name for controlling supply zone. And these algorithms are built based on all-time high and all-time low breakouts. It is not just all-time high or all-time low breakouts. Please remember, there are several conditions. All the conditions should be passed. Then only we call it as a controlling demand zone or controlling supply zone. And can we identify manually? Yes, you can identify manually. Up to a certain level, easily you can identify. When you are going more depth, certain places maybe it might be difficult, but many of the cases you can manually identify these high liquidity zones. So how to identify? So this itself is a big chapter. We will discuss how to identify these high liquidity zones manually in the coming months. I am not saying coming days, I am saying coming months. So once, because I am setting a target here, once, because my goal is 10,000 people should learn supply demand zone price action course. Once this count reaches, by the time many of you people will be getting familiarity about this bullish and bearish trade setups and all the concepts in phase 1 and phase 2 training program. And also you might be practicing good enough on the paper trading as well as a live market. By the time we reach this count, 10,000 members complete our course. So mostly you get a good experience. Probably that is the time to get into these advanced level strategies or concepts. So learning so many things doesn't give you good results. So you need to wait till that time. So once we reach 10,000 members completed the phase 1 and phase 2 training programs, I will be focusing on these concepts. how you can identify these high liquidity zones manually, whichever is possible. Certain things is not possible. Those things anyway we will take the help of NeoStock software. Hope I made it clear. The next point, they work very well on quarterly, monthly and weekly time frames. It doesn't mean they doesn't work in lower time frames, but their success rate is very high on quarterly, monthly and weekly time frames. So we can also adapt a strategy. What kind of strategy? The best trade setup can be, we can use them as HTF zones, higher time frame zones. All these quarterly or monthly or weekly. If you are using a weekly time frame as a HTF time frame, then this is a WIT trade setup. Or if this high liquidity zone, if you are using as a monthly higher time frame zone, then it is going to be a monthly income trade setup. Or quarterly means quarterly income trade setup. So in those income trade setups, you can use this controlling demand zone and controlling supply zone as higher time frame zones. This is the best trade setup. That way you can, especially the swing traders, get the maximum benefit. And daily and 75 minutes time frame zones also can be used for our NeoStock's high liquidity trade setup. I already defined high liquidity trade setup. Some of the people, our members are already, they are trading based on this high liquidity trade setup. In the next video, we are going to discuss about NeoStock high liquidity trade setup in detail. You will understand. So these are two zones. The controlling demand zone and controlling supply zone are also eligible in that particular trade setup. So this is the important point you have to understand from this particular slide. And the next one is S_DZ and R_SZ. S_DZ is the short name for support demand zone. And R_SZ is the short name for resistance supply zone. This is the way you can understand them. These algorithms were built based on NeoStock's volatility breakouts. In Q&A session I explained you, between the years 2008 and 2015, we did a lot of R&D work for developing different price action concepts, different indicators and other supporting concepts. At the time, we did a very big research related to volatility breakouts, and we developed a special algorithm, especially myself developed a special algorithm related to that. The purpose is different. I have some special thoughts in my mind. Based on that, I have used, especially for indicators point of view and other price action concepts point of view. The same volatility breakout algorithm what I have developed, that I have been integrated with this system, the S_DZ and R_SZ. That way I am able to trace high liquidity zones. And also it is not just volatility breakouts, and it is also based on other complicated checks, because a huge historic data we need to perform. And these checks are performed by doing so many different maneuvers. And these maneuvers are very, very important. Without maneuvering, it is highly difficult to. That's why this algorithm is a time-consuming algorithm. It takes it will do a lot of processing, internal processing. And finally, it will identify those zones, S_DZ and R_SZ. And that is the reason why their success rate is also high compared to the other high liquidity types. And they work well on all time frames. So that means these zones can be used by positional or swing traders, and also can be used by short-term traders like DIT traders or even hourly HIT traders, hourly income trade traders. And daily and 75 minutes time frame zones. This support demand zone and resistance supply zone related to daily and 75 minutes time frames can be used for NeoStock's HLQ trade setup. These two zones are qualified, and moreover these two zones are given a huge success. If you look into the fast data, they have given more success compared to any other types. So they have a consistent performance from these zones, especially S_DZ and R_SZ. That's why I told you this is a highly complicated, these zones are identified based on a highly complicated algorithm. So now many people asked, can we manually identify these zones? Manually it is very, very, very difficult. I can say almost impossible level. You know, you might be knowing a maze, right? Once you get into the maze, a complex maze, is it possible for you to come out of that maze? It is very, very difficult. Exactly here also. Manually, if you are trying to analyze this, it is as good as you are entering into a maze. And somewhere you will lose, completely you lose yourself. So, software algorithm, because we know that machines are very fast. They perform so many checks easily within short period. And such kind of missions also taking a lot of time for processing these zones. This is what you need to understand. Why it is so much complexity. Whatever the work machine is doing in just a second time, within a second, for human same work he wants to complete, maybe it may take several months time. Then can you imagine? A machine is spending several minutes of time for processing all these zones at different time frames. Then can you imagine? It will take several years of time for a human to identify these zones manually as per that algorithm. So that's why I said it is not practical, it is almost impossible to identify such kind of zones. But sometimes what we do, we can predict this could be a high liquidity zone. Maybe it could be any one of these types. I'm not saying S_DZ, R_. May be qualified to any one of these high liquidity zones. How we are identifying? Because multiple tests, same zone is happening again and again. Same zone again, new institutions keep on creating new zones. These are all some clues. Based on those clues, at least you can predict this could be a high liquidity zone. But by the time, several opportunities we already missed, right? Probably after 3 tests or 4 tests or 5 tests, you identified a zone. What is the guarantee that the 6th time again it is going to work? There is no guarantee, right? So that is the reason why when you identify more and more late a particular zone, later on their success rate you cannot really define. But if you identify first time as a fresh zone, this is a high liquidity zone, you identified it, then you have more success rate in that zone. So these are the points we need to observe. So anyway, this zone, this particular type is a complex, it is a highly complex one, because based on several algorithms I developed earlier, they are not related to supply and demand zone, please remember. Those algorithms are integrated with supply and demand zone for finding the zones based on these conditions. These zones are having higher institutional order flow will be there. That is the way we are predicting. Please remember, this is not, we are predicting. And this prediction, so far we got over 80% success rate. That is the important point you should observe. Still, 20% there is a failure rate, but that is small, very, very small. Compared to 80%, 20% is almost like a negligible percentage. And moreover, predicting 80%, predicting a zone that a zone you predicted with 80% success rate, that is a huge success rate. That's why we have seen the results, the past results. Every day we are monitoring these high liquidity zones performance. If you look into those results, because every month I am sharing the Excel sheet in our group, not only every day also we are evaluating the performance. Previous day, end of the market, we are generating the report. We are identifying the high liquidity zones as per our NeoStock HLQ trade setup. Next day, how many are got the trades, how many got success, how many got failed, and what is the return on the investment we got. Everything we are discussing in the everyday high liquidity zone analysis videos. For the last 6 months we are doing this. At the time of recording this video, 6 months before we started. Maybe you might be watching this video after 1 year. So don't think that last 6 months means the day when you are listening this video 6 months. The day when I am posting this video at our YouTube channel. From that day, if you take a reference, for the last 6 months onwards, from the date 6 months onwards, we've been monitoring. Because I am recording this video on 13th April. So take last 6 months data, 13th April 2024, year 2024. Take 6 months before that. That means from September 2023 onwards, we've been monitoring all these high liquidity zones. As on today, we have completed 6 months and 7th month's data currently we are evaluating. If you look into this entire data, we got more than 80% success rate for this NeoStock's high liquidity trade setup. This we are going to discuss in our next video. So this is a very important point. That's why I am focusing more on this. Okay, this is about S_DZ and R_SZ, because many people they asked me what is this algorithm, how to understand this algorithm. I don't want to generate I don't want to take these zones with the help of the machine or NeoStock software. I want to identify myself individually. These are all the questions several people asked earlier. They keep on asking the same question again and again also. Probably you people also try to ask the same question. That's why I am telling you people in advance. I want to avoid those questions, the same repeated questions again and again. Same question people are asking me again and again. It's waste of my time also. So that's why all of you please remember, it is almost impossible to identify S_DZ and R_SZ manually. But if the NeoStock software identifies, you can make use of it. And next one is a TCP_DZ and TCP_SZ. TCP_DZ is a short name for trend change point demand zone. TCP_SZ is the short name for trend change point supply zone. These algorithms were built based on counter trend trade setup. You may ask a question, can we manually identify these zones? Yes, it is possible. You need to learn the counter trend trade setup related concepts. Once you learn, you will be able to understand. But as I told you, all these concepts I will explain once we complete 10,000 members. Once 10,000 members complete the course. At the time, whatever the advanced concepts I am teaching you, that gets more significance. Without learning the basic concepts, without understanding the basic concepts, without understanding the core strategy, it is very difficult for you to get into these levels. Experience, minimum experience is required. And Dow theory principles, those who are already aware of Dow theory principles, it is easy for you people to understand these concepts. Because in Dow theory, we are using counter trend trade setups in the Dow theory. The trend changes that are taking place as per the Dow theory, exactly the same way we are applying the concepts, but here the point is the Dow theory principles are applied to ITF zone, because here the trend will be identified at intermediate time frame. You already learned in our core strategy. In phase 1 and phase 2 training programs, you already learned, especially in phase 2 training. So Dow theory principles applied to ITF zone, yet HTF zone, taking HDF zone as a reference. We've been identifying this counter trend trade setup. And what are these rules, how we can identify, all these things we will discuss in the coming months. They can also be used as a confirmation trade technique. So we have a confirmation trade technique, and it is very much useful for swing or positional traders. Of course, this is also useful for short-term traders also, but it is more, it makes more sense. I can say it makes more sense for swing or positional traders. Confirmation. See, generally when prices are entering into your higher time frame locations, what is the guarantee that prices will turn from there? There is a further possibility higher time frame zone also will be violated, right? So that is the reason why once the trend changes are taking place, at that time we can confirm our trades. So this confirmation trade techniques will tell you how exactly we need to understand these trend changes and where we need to plan our trades. But it is having some disadvantages also. Sometimes we might be missing trades also. Some risk will be there. See, whenever you add the safety, more and more safety, there you are also having higher chances that you miss your trades. It is all part of the risk management system you want to adapt. Even you don't miss the trade, not a problem. I want to take a trade in some other stock. But at least a minimum guarantee should be there. People who think that way, always they need to look for this confirmation trade technique. And these techniques I will be explaining to you once you learn these counter trend trade setups. As I told you, in the coming months you will be learning. And the daily and 75 minutes time frame zones can be used for NeoStock's HLQ trade setup. This is a TCP, trend change point demand zone, trend change point supply zones also can be used as part of our NeoStock high liquidity trade setup. But remember, NeoStock's high liquidity trade setup, the support demand zone, resistance supply zone, they plays the major role. Of course, these are all the supporting things. And the next one is a low priority. So far we have completed high priority, high liquidity zones. The three categories. That is controlling zones, trend change point zones, and also support resistance zones. They are all part of high liquidity, high priority, high liquidity zones. The second category in high liquidity zones, that is low priority, high liquidity zones. I don't know, I'm just saying low priority. I don't know whether the word is really good or it gives some negative impact on this. Low priority means don't say that the overall priority is low. No, it's not like that. Compared to normal demand and supply zones, low priority, high liquidity zones give higher success. No doubt in that. That is the point you have to understand. Why I am saying low priority, high liquidity zones compared to the high priority, high liquidity zones, their success rate is a little less. Because of a little less, I am calling it as a low priority. Hope I made it clear. So in that we have two types, possible LTF TCP demand zone, possible LTF TCP supply zone. So it is the short name for possible. LTF means you already aware, lower time frame. And TCP you already learned in the previous slide. It is a trend change point. Similarly, the other one also, it is a short name for possible lower time frame, trend change point, supply zone. So what is this possible lower time frame? So these algorithms were built based on counter trend trade setup. So Dow theory principles are applied to LTF zone, lower time frame zone, at HTF zone. Previously you learned in trend change point, you learned Dow theory principles are applied to ITF zone at HTF zone. But now we are saying Dow theory principles are applied to LTF zone at HTF zone. So why we need to apply at LTF zone? And this concept should be used only when LTF zones are possible, LTF zones are responsible in the absence of ITF zone. See, please remember, the trend changes takes place in ITF only, not in LTF. But who is responsible for these trend changes? Obviously ITF time frame. Sometime in ITF time frame, ITF zones absence will be there. They are not present, they are absent. In that scenario, the LTF zones are taking the responsibility. That is what the meaning. When LTF zones are taking the responsibility, which LTF zone is responsible? There could be one or two zones might be definitely responsible. Either maybe one of the zone or maybe the next zone, that kind of confusion will arise. Because of that confusion, we are saying the possible LTF zone, maybe this could be the reason. If not this, the other one is the reason. So we have conditions here. Because of these conditions, what happened now? Their priority, their success rate will slow down. Out of these two, one will give definitely good success. Is it the first one or is it the second one? Such kind of doubts might be there. So because of these reasons, this kind of zones, whatever identified, possible LTF zones, slightly their priority is reduced. This is the only reason behind reducing. One of the zones will definitely get success. If the first one is the responsible for, assume our software system identified two LTF zones. Maybe definitely one is responsible for the trend changes at ITF time frame. Trend changes always in ITF, no doubt in that. Because ITF zone is absent, not available or not present, in its place we are giving responsibility to LTF zones. So which LTF we need to consider? So one of them definitely we need to. If first one is not worked, definitely we plan our trades in the second one. So that way, see here, we are not giving guarantee. We are not giving guarantee. At least 80% success rate guarantee we are not giving. If you are using our trade setup. Which trade setup? NeoStock. The daily and 75 minutes trade setup strategy, whatever we developed, high liquidity strategy. Suppose in that strategy, if you want to include this mechanism is not giving you 80% success rate. So that is the reason why I put them into low priority high liquidity zones. Maybe it may give you 50% success rate or 60% success rate. Still it is better, but compared to 80% success rate, obviously 60% success rate is lesser or 50% success rate is lesser. So that's why these zones are not included. But if somebody wants to plan trades based on this, definitely you can plan. If it is successful, if your trade is successful, definitely it will give good return. As per the HLQ strategy, whatever the return we are expecting, same return you can expect even in these zones also. But overall success rate is more important. So that is the reason why this is not part of our HLQ zone strategy that achieves 80% success rate. But still you can include it if you are okay with 60% success rate or 50% success rate. Hope I made it clarity. And they can also be used as a confirmation trade techniques. Confirmation trade technique point of view, this can be used. And next one is a TCO underscore DZ and a TCO underscore SZ. So what are their abbreviations? TCO underscore DZ is the short name for trend change horizon. So it is a trend change horizon demand zone because the DZ stands for demand zone. And the TCO underscore SZ is a short name for trend change horizon supply zone. And these algorithms were built based on counter trend trade setup. The Dow theory principles are applied to ITF zones, but we are not taking any reference from the higher time frame. Without taking the reference from the higher time frame, we are monitoring these changes. How we are monitoring these changes, that we discuss once we get into these advanced level discussions after few months. Because I have a minimum target that has to be completed. 10,000 members should complete the course. By the time you get experience, all the people whoever is attending this session now, by the time you will be getting experience. And also by the time you will you may earn some profits also, good profits, with the help of our NeoStock HLQ strategy. So they can also be used as a confirmation trade techniques. See, all these trend change based, they are all used for confirmation trade setup. That is the point you have to understand. The word trend change already gives you an idea. Trend is changing. In which scenarios a trend change should be considered. That is what we are going to understand when we differentiate all these types. The trend change related, we have so far 4 different types. We have a TCP, we have a possible LT of TCP, we have TCO, the next one again TCZ. They are all based on trend changes. All trend changes also can be used as confirmation trade techniques. Because against the trend we are trying to take our trades. Against the trend means your uptrend is there. It's not exactly against uptrend. The trend changes should take place. The uptrend should be changed to the downtrend. But before changing to the downtrend, it will go to the sideways. What kind of decisions we can take to plan your short trades? That is the way you need to understand. Or currently the trend is downtrend, but you want to take long trades. In what kind of situation you need to plan your trades? The trend changes should take place from downtrend to the sideways. After that it will move to uptrend, but there is no guarantee. I clearly explained you these points in our phase 1 training program. Uptrend to trend will be changed to sideways first. From sideways it will be changed to downtrend, but there is also possibility that from sideways to once again it will change to the uptrend. That possibility is also there. But you plan your short trades. You are anticipating trend will be changed from sideways to downtrend. But actually what happened, again from sideways, once again it is continuing your trend with uptrend. So what happened? Whatever you anticipated is failed. At the times your trades will fail. The danger is there with counter trend trade setup. That's why I'm telling you people should get good experience before you get into counter trend trade setups. Why you want to first of all go to the counter trend trade setup? Why you should go against the trend changes? Because at the time of trend changes, if you are able to identify and if you take the trades, probably there are higher chances that you get more profits. Let us assume from downtrend it changed to sideways. You are anticipating from sideways it will go to uptrend. So you took a long trade. Whatever you anticipated, it worked. Now trend is changed to uptrend. Now stocks are moving up, further moving up, further moving up. So instead of taking your trade somewhere in the middle, now exactly during the trend changes, you are able to take a trade. That way your trade gives you more profit. This is how some people will play in the market. But there are also risks. What is the risk I told you? Instead of changing from sideways to uptrend, because earlier downtrend is there, downtrend is changed to sideways. You are thinking it will change it to uptrend. But instead of going to the uptrend, again it continued the downtrend. From sideways, once again it changed to the downtrend. Whatever you anticipated, that did not happen. At the time you get losses. That possibility is also there. So that is the reason why first you need to understand the system properly. That's why first you should plan only in favor of the trend. Trading against the trend is risky until you get good experience. Once you get a good experience, probably your experience will tell you. Probably downtrend, change it to sideways. Really that sideways will change to uptrend. Or once again the sideways will again continue with the downtrend. At least some fair idea you will get. Generally you will understand the overall market dynamics. That at the time you will be in a position to take your decision properly. Your experience at least will help you where to really enter and where not to really enter. So focus on a trend, playing along with the trend, not playing against the trend. Once you get experience, you can play against the trend. Okay. So they can also be used for confirmation trade point of view. So confirmation trade point of view, you have several options are available. And the last one is TCZ underscore DZ, TCZ underscore SZ. This is exactly same as TCO underscore DZ and TCO underscore SZ. The changes, a few minor changes you see at the software algorithms level. But at this point of time, there is no difference between this one and the previous one. Only knowing the abbreviation of these names. TCZ means trend change zone. So this is the trend change zone, demand zone. Next one is a trend change zone, supply zone, TCZ underscore SZ. So you have seen trend change point, you have seen trend change origin, you have seen trend change zone. All these are all based on the trend changes. And these algorithms were built based on counter trend trade setup. See, all these algorithms are counter trend because the trend is changing against the trend you are planning. But at the time of trend changes. So at the time of sideways related changes, you are entering into the market. But where to enter, where not to enter, you will understand once you learn all these types. And here also see all these, the main basis is your Dow theory principles. So the Dow theory principles are applied in ITF zone. They can also be used as a confirmation trade technique. See, your TCO also said the same. Then what is the difference? The difference is based on the kind of the order flows we are identifying at a lower level that we will discuss. This is not the right stage to enter into that order flow related levels. That we will discuss once we get into these advanced concepts after you get sufficient experience. At least the benchmark I set is by the time our channel reaches to 10,000 course completion. I'm not talking about how many views. I'm talking about 10,000 people should complete the course, complete course. Because some people attend phase 1 and they don't continue with phase 2. Some people will just randomly they come and attend few videos and they leave. But some people dedicatedly they are learning the course. So I want those people, the dedication. Like the 10,000 people complete the course by the time you people get good experience. Definitely it will take few months time to get into that stage. Maybe it could be 6 months or it could be 12 months, I don't know. But definitely it will take. So when more and more numbers are increasing, at least I can understand how you people are able to proceed with your trades and how you are getting success. See, already we have very few members completed the course and doing the real trading. Now they are all last couple of weeks, they've been every day posting their success stories. Especially for the last 1 week, more at least people are posting their success stories because they've been analyzing the software related reports in the comment sections, and people are also started interacting. When more and more people are participate, I get a confirmation that more and more people have completed the course. Once I feel sufficient number of people are getting the profits, when I feel that is good enough to explain these advanced related strategies, so that day I will take the decision. But definitely not for some small number of group people. More people are there, the advantage is there won't be any confusion among all these members. Because otherwise unnecessarily people are entering into the wrong videos without completing the earlier lessons, and they keep on asking some questions, and it is really I'm feeling discomfort to provide answers to all those questions. In a systematic way, if you learn, you won't get any unnecessarily doubts. By skipping 2 or 3 chapters, and if you jump to the next chapter, and if you ask a silly question, how do I feel? Because I also feel my time is valuable. Silly questions if I am answering and I am trying to convince, because see, our channel is growing, that's why I am taking responsibility to answer even your silly questions, some of the silly questions, which you would have avoided in asking if you would have completed the earlier chapters. Without completing earlier chapters, when you ask, and I am spending my time on that, it is definitely waste of time, isn't it? Some of the questions I already answered in the question and answer sessions without listening Q&A videos and again asking the same repeat question. It is waste of my time. Okay, today I am answering because the numbers are small. At least I am having some bandwidth to answer even your silly questions. But that may not be possible in the future, in the coming days. If I am adding all these videos, you people will keep on asking more and more questions. So that's why I want to ensure a sufficient number of the people who complete the course, having the genuine knowledge. And whatever the questions you ask at the time, they are going to be the genuine questions. So whatever the effort I spend for you people in answering your questions, also having some value for that. Without value, spending my time is waste of the time, right? So this is the reason why I set, these are all several reasons why I set these benchmarks. So 10,000 is a compulsory rule. 10,000 people should complete the course, and then you should be ready to learn these concepts. Some of these high liquidity zones, how we are identifying, manually also you can identify, but you can't identify as like the system is identifying. System will do deep analysis. That deep analysis is not possible for the human. Suppose if system analyzes 200 stocks and identifies some of these manually, whatever you want to identify, if assume computer identified out of 200 stocks, in 20 stocks are identified. By after learning the theory, if you analyze these 200 stocks, you may identify 5 or 6. Why you missed remaining 15? Maybe the depth you need to understand, or maybe more and more iterations you need to repeat. That may not be possible for the human. There are reasons. Excuse me. Anyway, you will understand this. I don't want to get more deep into this and make you people think unnecessarily related things from this. Hope at least you got some comfortness by knowing the abbreviations of these names and what kind of techniques we are using. See here, the techniques we are using, 3 techniques. One is a all-time high and all-time low breakouts based on some special conditions. Not every all-time high or all-time low breakout. It doesn't work. Based on some special scenarios. Those special scenarios you will understand once we discuss about that. And the second one is based on trend changes. We have several types related to the trend changes. Nearly 4 types we identified. And apart from all this, the most important thing is the support and resistance. That is based on the special algorithms I developed between the years 2008 and 2015 for about the volatility breakouts and some kind of maneuvering techniques. Some special rules I added in those algorithms before identifying these support and resistance zones. So those kind of zones having a dependency on these volatility breakout algorithms developed by the NeoStock software. Already our NeoStock software is having some volatility breakout algorithms. You are not aware of them because they are not for the public. But I integrated with the system, but it gave a very good success the moment I integrated with our supply demand zone. Please remember, all those techniques are not at all part of supply demand zone theory related things. So you don't understand them because they are all different concepts. Because we did a huge research between the years 2008 and 2015. In Q&A 1 I explained what kind of work I did between those years. If you did not listen Q&A 1 video, please listen that video. It is there in Q&A playlist. Then you will understand the kind of effort we put. And today, that effort is giving good results for us. Forget about whether you understand how manually you are doing or with the help of machine you are doing. But today we are enjoying the profits, right? Some of you people are already making profits for the last couple of weeks by using NeoStock software, high liquidity zone, trade setup. And that is the main thing you are supposed to learn. Then why we discussed this? From this list, what kind of zones you are going to use in high liquidity zone trade setup, that you need to understand. So you have used only 3 types. The types I specified in high priority, high liquidity zones. Those zones only I used. So in the next upcoming session, you are going to learn NeoStock high liquidity zone strategy. In that strategy, only the high liquidity, high priority category only you will be using. That means the controlling zones, trend change point zones and support resistance zones. And support resistance zones plays a significant role in NeoStock's high liquidity zone strategy. That is what you need to observe. So this is the next topic and a very important topic. And this topic will help you get up to 80% success rate. Not up to, more than 80% success rate. As per last 6 months data, whatever we completed, based on that we got 88% success. But I am not claiming 88% because I developed these algorithms with an objective to reach 80% success rate for this strategy, NeoStock's high liquidity zone strategy. And this strategy is for short-term income trade, especially we get the profit during intraday itself. Short-term income trade, generally you wait for 2 days or 3 days, right? 4 days. But here the beauty is, instead of waiting 2 or 3 days, the return, next 3-4 days return what you are expecting, same return you get in the intraday itself. That is the extraordinary. That is the beauty of this strategy. And also it is having so far more than 80% success rate based on the last 6 months data. The last 6 months data at the time when I recorded this video. You should not forget that point. So this is about lesson 21.2 part 2 video. In lesson 21.3, that is the part 3 of lesson 21, we are going to learn the very important strategy, the most powerful strategy, NeoStock's high liquidity zone strategy. Whatever the rules I defined for this strategy, everything you will be applying. And also this strategy is a very simple strategy. The reason is you need not worry about the trend, you need not worry about the location, you need not worry about the price direction, even you need not worry about the odd enhancer score. Just ignore all those things. Then what we focus? The lesson 16, whatever you learned. Why I am mentioning lesson 16? In case if you did not listen properly, make sure each and every point in lesson 16, we have 2 videos in lesson 16. From both the videos, each and every point you learn properly. Without any skip, listen, complete both the videos. That fine-tuning the zone concept we are going to apply in NeoStock's HLQ zone strategy. The institutional order flow in this zone is taking care of the rest. All these points we discuss in detail in the next lesson. But before getting into the next lesson, please make sure you complete lesson 16, both the videos, completely in detail. You should have crystal clear clarity about both the videos in lesson 16. This is the expectation I am setting to all you people. Okay, I made it clear. Now let's continue with this video in our next lesson. Thank you.